Famous investors like Jeremy Grantham and Michael Burry have recently spoken about the super bubble that assets have been in and how they believe it will all come crashing down soon. Well, last week was a terrible week for the stock market, with the S&P 500 retracing back down to the lows that we saw in June, which means it's now down 22% from all-time highs that we saw in December of last year. This could therefore be a sign that this super bubble has entered its next phase, which would mean a collapse has well and truly begun. Today I'll be taking a closer look at the super bubble theory in more detail, as well as how much worse things could get while this bubble does deflate. So let's take a look at the theory of a super bubble and why it could be the end of this current super bubble that we're in right now. So Jeremy Grantham came out a couple of weeks ago and said that this super bubble that he previously warned people about has not yet popped, even after the turbulence that we have seen this year in the stock market. So Jeremy is the co-founder of asset management firm GMO and is known in the investing world for calling market bubbles. He did become famous for spotting and profiting from bubbles in Japan in the late 1980s, tech stocks during the dot-com bubble, as well as in US housing before the 2008 financial crisis. So he has recently said that the recent bear market rallies that we've experienced in the last couple months do fit the pattern of a super bubble cycle and usually take place just before the economy and stock market truly do start to deteriorate. Now he does see more trouble ahead due to a dangerous mix of overvalued stocks, bonds and housing combined with a commodity shock and rising interest rates. Now, Jeremy Grantham does say that about 85% of the time, markets behave quite normally. However, in the other 15% of times, we see investors act quite irrationally. Now, this can mean that they will panic sell stocks, regardless of value, or they just get carried away with excessive optimism, which is the type of irrational investing that Jeremy believes we have been experiencing for a while now. Now, he specifically mentions the meme stock squeezes that we saw in early 2021, as well as the IPO and SPAC frenzies that have been going crazy throughout 2020 and 2021. Now, this was a period where we saw an explosion in confidence, high levels of speculation, as well as crazy wishful thinking regardless of value. Now, Jeremy believes that this rapid appreciation of all stocks, including low-quality stocks that do not bring much intrinsic value, has turned stocks into a super bubble. And aside from this current super bubble, we have experienced 3 others in US markets, and this includes the dot-com bubble of 2000, the 1972 stock market crash, as well as the 1929 Great Depression. Now, across these 3 super bubbles that we've experienced in the past, we saw a consistent series of events take place. So this starts with the divergence between conservative and speculative stocks, rapid bear market rallies, the rapid onset of a recession, and then finally the much increased probabilities of further unexpected financial and economic accidents. Now, Jeremy believes that breaking down these super bubbles does take multiple stages. So after first forming, a setback then does occur, like what happened in the first half of this year with the Russian conflict. Now, this setback does knock asset valuations down a little bit, and it brings investors back down to reality, making them realise that we don't live in a perfect world. We then have the bear market rally. Now, we have seen a few of these take place in the market in the last few months, where certain stocks have recovered quite well. However, they then start to fall back down to the lows that they had reached before, and we have really started to see this take place last week. And if you look at many stocks in the market, including big names like Microsoft, Amazon and Google, you will see this trend really start to take place, and you can definitely spot where it is happening. In the dot-com bubble, we saw the Nasdaq recover 60% of initial losses across a 2-month period in 2000. However, ultimately the decline did continue and stocks didn't bottom until early 2003. Then the final stage of a super bubble is the capitulation, where fundamentals deteriorate and the market declines to an absolute low. And this is the stage that we could potentially be entering into right now. So Jeremy notes that historic super bubbles are always followed by major economic setbacks for a reason, and this is because they occurred after a very extended build-up of market and economic forces, with a major surge of optimism at the end. Now, at the peak, the economy always looks near perfect, with full employment, strong GDP, no inflation and record margins. And the first leg down of today's super bubble was actually due to rising inflation, which has always been a main driver of historical valuations. So the next leg down will likely be driven by falling margins, which will hit earnings across the market. Now stocks will fall in price because their earnings are falling, which means that the price of these stocks does need to fall as well in order to keep the same PE ratio as before. So investors like Michael Burry also believe that multiple compression will take place as well. Now this means that not only will stocks need to fall in price to keep in line with previous PE ratio valuations, but they will also need to experience shrinking multiple valuations. So for example, a stock that was previously valued at around 15 price to earnings ratio may ultimately shrink down to a lower valuation of around a 10 PE. Previous super bubbles did see a much worse subsequent economic outlook if they combined multiple asset classes or if they combined an inflation surge and rate shocks with a stock bubble. Now ultimately, Jeremy Grantham believes that today's super bubble features the most dangerous mix of these factors that we've seen in modern time. All three major asset classes involved, housing, stocks and bonds, were critically historically overvalued at the end of last year, and now we are also seeing an inflation surge and a rate shock to go with that. And to make matters worse, we have a commodity and energy price surge, and these commodity shocks have always cast a long, growth-suppressing shadow historically. Now, given these negative factors, Jeremy thinks that it's unsurprising that consumer and business confidence measures are hitting historic lows, and the tech sector in particular is seeing rising layoffs, with CEOs bracing for recession. Now, we've seen bear market rallies already in this cycle. However, Jeremy does state that if the bear market has actually already ended, then the parallels with the three other US super bubbles that I mentioned earlier, which have been so in line so far, would be completely broken. Now, this is always a possibility, as each cycle is different and government responses can be unpredictable as well. However, Jeremy does believe that these few epic events do seem to act according to their own rules, and in his own words, he says that if history repeats itself, then we're going to end with a tragedy in the market. So now let's take a closer look at some of Michael Burry's bubble comments in the past, as well as in more recent time. So Jeremy Grantham is not the only investor that has talked about super bubbles in the past, and he does join a list of notorious investors who believe that we are currently in a super bubble, or at least a regular bubble right now, and obviously one of these is Michael Burry. So Michael Burry has been very bearish on the stock market for a while now, and at the start of August he did tweet, "The silliness is back after 1929, after 1968, after 2000 and after 2008, the strain of silliness that transformed bulls into bubbles completely and utterly disappeared. But today's pandemic era silliness is not yet dead." Michael Burry also hinted at the start of the month that the collapse is now underway, joking that his followers keep asking him when the market is going to crash, posting a chart of the S&P 500 to show we've already dropped a fair bit, but also that there is a long way to go yet in order to reach pre-2020 levels. Now, Michael Burry did raise the alarm on the market back in summer of 2021, saying that this is the greatest speculative bubble of all time in all things, cautioning investors who are buying into the hype that they were heading towards the mother of all crashes in his own words. Now, he then also suggested a few months ago, in May, that the S&P 500 could drop down to as low as 1900 over the next few years, based on how the past crashes have played out. And if this does happen, then it would mean a further decline in the S&P 500 of around 45% from where it is right now. Similarly to Jeremy Grantham, Burry has also been very dismissive of the rallies that have taken place in recent months, labelling them as standard bear market rallies that have taken place in historic stock market crashes as well. And to add to this, as of the end of Q2, Michael Burry's asset management fund had completely sold out of all stocks besides just one company, which was a private prison company. So this means that Burry is now either holding an awful lot of cash right now, or he is holding short positions that don't have to be disclosed in 13F filings. So based on all of his comments in the past, as well as his actions with his portfolio, Burry clearly thinks that we are on the verge of a significant collapse, and is truly putting his money where his mouth is for this one by taking his money out of his long positions for now and putting it into either cash or short positions. So ultimately, based on what Jeremy Grantham and Michael Burry have been saying, as well as their theories of super bubbles, it's looking like we could well be heading into the final stage of a super bubble, which would mean the total collapse and the deflation of the super bubble, which means that we could be falling a lot further from where we are right now. It will certainly be very interesting to see where we head from here and if we have any more bear market rallies, but it's very interesting to see what these famous investors do think. So that is all for today's video, guys. I hope you did find it interesting and useful to get an insight into what these famous investors do think is going to happen in the markets, as well as the theory behind the super bubble that they think that we are in right now. Please remember though that this video is purely based on my own research and my own opinions. It's not financial advice and I'm not a financial advisor. It's for purely entertainment purposes only. But with that being said though, guys, please be sure to leave a like if you did enjoy the video. That does help out a lot. Also be sure to drop me a comment as well. Let me know what your thoughts are on this theory of super bubbles and where you think the market could be heading in the next 6 to 12 months. And also finally, be sure to subscribe as well if you want to see more videos similar to this in the future. And apart from that, guys, thanks a lot for watching.